Welcome to Classic Value Investors and Microcap Explosions. This is Mariusz Konieczny. After I made the video about good versus bad businesses, there was some good feedback that people like this kind of content. I figured I would create a video series called Why is this a great business? So let's start with Copart, which is a company with the ticker symbol of CPRT. And if we just look at Morningstar, the operating metrics of a business like this, you could see that return on equity are absolutely fantastic. 22%, 31%, 42%, 31%, 35, 33, 29, 35%. Returns on assets are also fantastic. Look at the gross margins, 42%, 40, 43, 43, very nice. Operating margins, over 30%, pretty much every year. Net profit margin, which is after taxes, over 20% here these years, and then it got in 2020 it was over 30%. So anytime you see these kinds of metrics, it's a pretty good indication that this is a fantastic business. And now, if you don't understand how to read these metrics, I suggest you read two of my books: How to Value a Stock, this one, and the basics of understanding financial statements, which is breaks down how to read financial statements. But anyway, let's go back to the company. Okay, so what Copart does is, well, before you understand what it does, let's say you're driving a car and you get into an accident, okay, and you have auto insurance. So if you have insurance and it costs, let's say, I don't know, $1,000 to fix it, the insurance company might pay for the repairs. However, if the damage from the accident is too big for it to be worth it, what happens is that the insurance company takes your car and then they just write you a check. And now the car that they take from you is considered a salvage car. It's and the insurance companies, such as Geico or whatever insurance companies there are in the US, they have to do something with those cars. So what Copart is a company that helps insurance companies or whoever needs to sell salvage cars, sell them through this website right here, to various different people that buy those kinds of cars, whether they buy them to repair them or whether they buy them to take the car apart and sell it into as parts, into pieces. So Copart is kind of like an eBay of salvage cars. And what makes this company so special and why it's able to earn such great returns on equity and assets, and because it's able to earn it, if you look at the stock price over the last 20 years, this company has been an absolute success, and it's no accident. And now, if you want to do some due diligence on this company, I suggest you read this book, Junk to Gold, which is a story of the founder and how he founded this company. So anyway, any auction company like this, the moat, which is a competitive advantage, comes from the network effect. And the network effect is kind of like eBay, which is the more people that are going to this website to buy salvage cars, the more insurance companies want to provide cars to their website. And so What Copart it provides a service to these insurance companies so that they could get the highest possible price for these salvage vehicles. And now you might think to yourself, well, what's the big deal? Anybody can set up a website and start selling something like this. Well, there are huge barriers of entry to something like this, and which provides another source of moat. And the barriers of entry are that in order to sell salvage cars, you actually have to have a place to store them. So what Copart has is 150 permitted yards all over the United States, and yards is where those salvage cars are stored or delivered from the insurance companies, and then when they are bought, they are obviously transported to the buyer. But now, if you are just an independent salvage yard owner, let's say you own one yard in Denver, well, you don't have the scale. And if you're dealing with insurance companies like Geico or any other national insurance companies, they are national, okay? And when they have cars to sell, they want to deal with a company that has yards all over the United States, and that's what Copart is. It has all of those yards all over the United States. It's the biggest owner of the yards, and those yards provide a competitive advantage because to ship cars from the accident place to the yard, I mean, it's expensive to ship them. So the closest or the bigger the network of yards, the more likelihood that the particular insurance company will want to use them. So that's why this company has such an advantage. If we look at the company's income statement over the last 3 years, you can see that the revenues have been going up. The company is profitable, and we already talked about the margins. Net income is profitable. The share count is pretty consistent, and is actually has been going down. And that's probably because the company has been buying back shares. If we look at the cash flow statement, the cash flow statement starts with net income, and then it has all of those adjustments to arrive at the net cash provided by operating activities. So this is the cash that operations generate for Copart over the last 3 years. And by looking at the investing section and financing section of the cash flow statement, we can see where this money is going. And now you can see here purchase of property and equipment. Most of the money goes into purchases of property and equipment. And what is property? Well, property is buying yards, for example, and that's where most of the money goes. If you go into financing activities, this is where you would see maybe purchases of common stock. You could see that there was a pretty significant buyback of 365 million, but you don't see anything when it comes to dividends, because this company, it doesn't pay any dividends yet because it is still growing and acquiring yards. So the money that it generates from operating cash flows, a big chunk of it goes to here, which is purchases of property and equipment. And this is a good sign because they are purchasing the yards in the US, and now they're expanding internationally, which will bring in more business, grow revenue, and as long as this company continues to operate the way it operates, it will continue delivering positive performance for its shareholders. In summary, Copart is an example of a very good business. It's a leader. It doesn't have a lot of national competition. It has a moat stemming from the network effect. It has the business has high barriers of entry, and because of these things, the company is able to generate very good returns on equity, very good returns on assets, generate very good gross margins, operating margins, and net profit margin. And all of these things benefit shareholders that choose to hold such a stock for a long period of time.